Good morning, hello and welcome to Market Cafe with me Ankita Saxena and with me is my co-anchor Snehi Shah. This is a show where we give you a roundup of how the global markets moved and what are going to move the markets in today's trading session. But first up, we'll give you a roundup of the global markets. So Snehi, the big CPI number is out in the US.
Absolutely.
So tell us what was the CPI print, how did it look like and how did it move the markets?
Absolutely. So the CPI number has come a little below what the street was expecting in the US. So that is what held the Nasdaq Composite higher. And the index closed higher on Wednesday as investors fled to the tech stocks after a tamer than expected inflation report. The tech-heavy index added almost 1%, closing at 12,306. While the S&P 500 added almost 0.4% to close at 4,137. Finally, the Dow Jones Industrial Average inched downwards by almost 0.1% or 30 points to end the day at 33,531. Now let's talk about the consumer prices for the month of April, which climbed almost 5% to 4.9% from a year ago, which was lesser than the 5% gain that was anticipated by the economists polled by the Dow Jones. Month-over-month inflation matched the expectations with a 0.4% increase in April, and the yield on the Treasury, the 2-year Treasury yield, fell about 11 basis points to 3.9%, while the rate on the 10-year declined 8 basis points to 3.4%. Now let's look at the big movers on Nasdaq, and shares like Nike and Caterpillar ended the session lower as some investors reasoned that inflation was slowing because the recession is imminent or has already arrived. Now, Airbnb and Twilio fell 10.9% and a whopping 12.6% respectively, a day after reporting weak forecasts, and shares of the Google parent company Alphabet gained more than 4% as the search giant unveiled new gadgets and details on its generative artificial intelligence tools. Let's also quickly shift focus and move on to European markets that closed lower on Wednesday as investors digested the latest US inflation data and how it could affect the US Federal Reserve's monetary policy stance. Now, the Pan-European Stock 600 index provisionally ended lower by 0.5%, with major bosses and most sectors in the negative territory. Food and beverages stocks on the European indices led the losses, down 1.4%, and meanwhile tech stocks bucked the downward trend to close 1.3% higher. But this is all that was happening on the global front. But Ankita, let us know what was happening on the commodity front. How was crude doing?
Alright, yeah, Snehi, we did see the CPI print come out yesterday and that weighed down on the oil prices as well, because even though, the oil price, the CPI number came out as in it eased off to 4.9% versus 5% estimates, it really weighed down on the oil prices because it is still far above the target, the Fed target of 2%, and also the increase of 0.4% this month is higher than the increase of 0.1% which was actually last month, and that really weighed down the oil prices that fell more than $1 a barrel, ending the 3-day rally that we saw coming in the oil prices, as of course the economic data suggested that the US Federal Reserve might hike the interest rates further. Now, Brent crude dropped 1.3% to settle at $76 a barrel, while US WTI crude settled at $72.5 a barrel, fell 1.6% in trade. Rising global interests have been weighing down the oil prices in the recent months as traders are concerned about the economy crashing into a recession, and oil prices have been depressed by the fears about the economic growth relating to the banking crisis and a normal seasonal weakness that we usually see during the spring season as energy demand moderates. So the US crude inventories data was also likely to come out yesterday, and it rose by about 3 million barrels last week due to another release from national reserves and a drop in the exports. Now, an industry report showed an unexpected build which weighed on the prices for most of the sessions.
Alright, so that's what was happening on the crude and the commodity front. Thanks a lot, Ankita, for that. But let's move on and see what are the important events due on Dalal Street today as well as globally that you should be keeping an eye out on. Now, on India Inc. on the Dalal Street, you've got among the Nifty 50 pack, you've got Asian Paints and Eicher Motors that's going to declare their Q4 earnings today. Other earnings from the non-Nifty pack include companies such as Aditya Birla Capital, Deepak Nitrite, Balrampur Chini Mills, Dr. Lal Path Labs, Intellect Design Arena, BSC, Siemens India, and the likes of it. Now, global cues: after US CPI numbers came out yesterday, you can expect US PPI, initial jobless claims numbers to come out today, and UK Bank of England rate hike decision will also come today. Among UK, you also have the GDP numbers coming out today. While shifting focus to China, you've got PPI, FDI as well as the CPI numbers coming today. Now shifting focus to global earnings, you've got the SoftBank Group and the Honda Motors Group that will declare their numbers today. Corporate action today is the weekly expiry day for derivatives trading. It's a Thursday. And BKG lock-in period will open on 64% shares. Nexus Select Trust, it's the last day to subscribe to the IPO, so keep an eye out for that one. AB Capital will consider the proposal for raising of funds, and Som Distilleries, the right issue of that will close today. Among other events, you've also got the MSCI rejig happening today. It's a big one, so keep an eye out for that.
All right, then moving on, the important data that came out of the US. The Bureau of Labor Statistics of the United States announced its inflation data for April. The core consumer price index rose to 5.5% in line with estimates on a year-on-year basis. And the headline inflation marginally cooled to 4.9%. Because of that, the Treasury yields tumbled following the report, further supporting the stock market, which has been worried about the higher rate snuffing out the economic growth. Now, we spoke with global market analysts, so listen in to what they had to say.
The US CPI has dropped marginally lower actually from the 9.1% peak that we saw earlier on last year. So it is definitely a wider gap there. We've seen that inflation drop down by a lot from 9.1% to 4.9% after a lot of 0.75 rate hikes and now a 0.25 rate hike. So there definitely could be a pause. Actually, traders are now assuming and anticipating in the Fed meeting that there's likely going to be a pause. This is suggested by obviously the positive figure from the CPI, and also the NFP figures suggested otherwise last Friday when the labor market still remains strong. So the Fed does have the capacity to increase rates furthermore. So now we wait and we see, but on the CME tool, according to CME, more than 80% of analysts and traders do believe that we're going to see a Fed pause.
So that was the global analyst on US CPI numbers, but also now let's take stock of the ripple effect from the US April inflation print on other asset classes. And Bitcoin briefly dipped below the $27,000 mark for the first time in 2 weeks amid volatile price swings, reversing all initial gains following the release of that mildly encouraging inflation number.
And staying with the central bank action, the stage is set for the Bank of England to hike rates for 12 consecutive meetings later today as red-hot inflation continues to be a spot of bother. Street factoring in another quarter point boost in rates to 4.5%, the highest since 2008.
And tech giant Microsoft is holding off salary hikes for all its full-time employees this year. This move aligns with the company's efforts to reduce costs and as revenue growth slows. And CEO Satya Nadella said that the performance bonuses for the top executives would be down from compared to the previous year.
And streaming giant Disney's streaming losses narrowed in the quarter gone by as prices increase helped offset loss of as many as 4 million subscribers at Disney+. However, it did post revenue and profits in line with street estimates. Meanwhile, company lost 4 million subscribers in the quarter, most of which came from India.
And on to some more important news that we are tracking for you this morning. Global pharma major Eli Lilly has assured it will not hike prices of its insulin products again before the Senate Health Committee hearing. Company's CEO Dave Ricks said the only executive to make such a promise. Meanwhile, Novo Nordisk and Sanofi said that they will hike prices but responsibly.
And President Joe Biden will host Prime Minister Narendra Modi for an official state visit to the United States on June 22nd. The visit will also include a state dinner. The visit will offer a valuable opportunity for the two countries to further deepen their comprehensive and forward-looking global strategic partnership. Let's go across to Srinjoy, who breaks that down for us.
Undoubtedly, and this will be the third meeting in about a month because in this month alone, there will be a meeting between Biden, or at least they'll be in the same room at the same time for the G7 meeting in Japan. And then there will be the Quad meeting in Australia, and that both will be later this month. And it's only after that, on the 21st of June, that Prime Minister goes to Washington. It's a state visit, as you rightly said, and there will be an official function, an official dinner, and so on. So it's a big moment, and you would expect a lot to happen during the during the Modi visit. This will not be like, let's say, the one that the Prime Minister had when Trump was president, Texas and this and that. This will be more like 2 or 3 days in Washington and a state visit. So that is very clear. America sees India as a very close friend, and this closeness is important, particularly keeping in mind China, and it's going to get closer and closer over the next few years. Yes, Biden has said he will run, and normally speaking, his age, of course, is against him. Normally speaking, most American presidents who run, who who want a second term, usually get it. Most American presidents in recent years, uh, Reagan did, Clinton did. A lot of people have got second terms. Obama most certainly got a second term as well. We'll have to see if Biden, who has done a lot, his legislative work has been enormous, does get a second term or not.
All right, thanks, Shinjoy, on what PM Modi's visit could mean to the US on 22nd of June. Thanks for that quick roundup. But how to build your own brand, invest wisely, and take the first step to becoming an entrepreneur? YouTuber, entrepreneur, and author Ankur Wariku shares his take in a chat with Avan Dubash. Listen in.
I realized I have just lucked my way through getting to that point. There is still so much to know, so much to learn. But most importantly, I learned how the Indian consumer behaves and how they're so different from what we read about when we read from the West and the literature of all startups and how to build startups and so on. So that was a great training ground for me. Those 4 years from 2011 to 2015 when I was running Groupon, I learned a lot.
Okay.
And then in 2015, we did a management buyout of the Groupon India business, made that into Nearby, raised money from Sequoia Capital, and started literally all over again. New brand, new business model, new platform, everything from scratch. And it was not an easy journey at all. We felt that we would just win it, and everything was done, your money is raised, but nearly not. It was almost as if we started from scratch. I made a lot of mistakes as a founder, and over the course of 4 years, we got to a point where we were reasonably big. We were doing about $100 million of sales a year. We were profitable. But we were not a success because we had sold a bigger dream to an investor group. And for all the right reasons, they had bought into that dream and invested with that kind of vision in mind. But when it did not unfold, it was quote unquote not a success.
I definitely want to delve into failure and the mistakes you've made as an entrepreneur. But first, let's talk about what you do. Your main business, I would say, is being a YouTuber or a social media star or a financial influencer, or however you want to put it. And just recently, I interviewed, Nas Daily, and he was saying that not everyone who has 1 million followers makes money. So how do you make money?
So he's right there, and he's done it for so long that he knows that. There are multiple ways of making money when you think about content. The easiest way, which not every platform has, but certainly YouTube has, is that you turn on your ads.
He was raving about YouTube, obviously.
Yeah, because that's a really sound platform because it's been consistently performing for several years now. It knows its product and so on. This is.
All right, do watch out for that conversation with Ankur Wariku. And it's time for us to slip into a short break. Don't go anywhere. We go domestic after the break.
Hi, welcome back. Thanks for staying tuned. You're watching Market Cafe on ET Now. While we've seen a good rally on the Nasdaq yesterday, Ankita, tell us how the Asian markets did yesterday.
Asian markets have just
early this morning.
Have just opened up, and well, Asian markets are pretty mixed right now in trade because we did see the big CPI number come out of the US, but China is also expecting its CPI number to come out today, and it is expected that we are expecting a 0.3% to come in. That's the poll that Reuters had done, and that's the number that we are expecting to come out from China. But as of now, we can see Hang Seng is very, very flat. It is in the green, up just 2 points, of course, and Hang Seng is also currently in the green. It is up 44 points. However, we can see that Nikkei is down 38 points. It's pretty flat. The market is pretty flat, but it is in the red. ASX 200 is down 13 points, again very flat. Shanghai, as I said, is very, very flat. Also, SGX Nifty, as we can see, is in the green, up 0.2%, up just 36 points. So, a very muted, lukewarm market right now, mixed in trade. And if I look at the US futures in the green, but quite flat right now. So we can expect a muted start to the Indian markets with perhaps a positive tick.
All right, the SGX Nifty is coming in up 0.2%, a rather flat start, but let's see how that pans out for Dalal Street. But with that, here's the news for the hearing impaired.
आज राष्ट्रीय प्रौद्योगिकी दिवस पर प्रधानमंत्री मोदी करेंगे 5800 करोड़ रुपए से अधिक की कई वैज्ञानिक परियोजनाओं की शुरुआत। वैज्ञानिक और तकनीकी प्रगति को प्रदर्शित करने वाले एक्सपो का भी करेंगे उद्घाटन। उत्तर प्रदेश में स्थानीय निकाय चुनाव का आज दूसरा चरण। अयोध्या, मेरठ, गाजियाबाद, बरेली, अलीगढ़ और कानपुर समेत कई शहरों में महापौर और पार्षद पद के लिए होंगे मतदान। राजधानी दिल्ली में सरकार या उपराज्यपाल किसके पास है प्रशासनिक अधिकार? आज सुप्रीम कोर्ट में आ सकता है फैसला। वहीं महाराष्ट्र में शिवसेना के 16 बागी विधायकों की अयोग्यता मामले पर भी अदालत सुनाएगी अपना निर्णय। आज कश्मीर यूनिवर्सिटी में होगी यूथ 20 प्रतिनिधियों की परामर्श बैठक। जलवायु परिवर्तन और आपदा प्रबंधन में कमी पर होगा फोकस। तो वहीं गोवा में आज विकास कार्य समूह की बैठक का होगा आखिरी दिन। पाकिस्तान में इमरान खान की गिरफ्तारी के बाद हिंसा में मरने वालों की संख्या हुई 6। मौजूदा हालात पर प्रधानमंत्री शरीफ ने कहा, सरकारी संपत्ति को नुकसान पहुंचाना आतंकवाद, हिंसा करने वालों को मिलेगी सख्त सजा। और आईपीएल में आज कोलकाता नाइट राइडर्स और राजस्थान रॉयल्स का होगा मुकाबला। कल हुए मैच में फिर दिखा धोनी का जलवा। चेन्नई सुपर किंग्स ने दिल्ली कैपिटल्स को 27 रनों से हराया।
Moving on then, the company with India's largest solar PV module manufacturing capacity has plans to expand further as demand for alternate source of energy continues to surge. We caught up with Wari Energy's CMD Hitesh Chimanlal Doshi at their plant and got an insight into how these modules are made. Listen into this slice of the conversation.
You don't have debt on your balance sheet.
Not yet.
Why is that? And why are you planning to go public if you don't need cash? If you don't have that, that means you don't need cash.
No,
You're going public.
Yeah, our expansion plans, if you look, now we are planning to invest around 8,000 crore additionally.
Okay.
This complex which you have visited today, this one complex, we have the 4 facilities nearby. We are investing here 3,500 crores. The new complex which we are building up, there we are investing 8,000 crore. And definitely at that level, we need equity and debt. Okay. So that to meet that equity requirement, we are going for the pre-IPO round as well as the IPO also.
You've done one pre-IPO round already.
Absolutely.
Okay. So when are you planning to take it public?
Public, most probably by end of this year, we should be in a public. Or maybe by January, let us.
What I also want to understand from you that this industry right now does need a lot of, it needs a stable policy framework.
Right.
US government right now is perhaps giving a lot of initiative for incentive for non-China solar panel manufacturers, whereas you're benefiting because of that. But there is an election cycle next.
Right.
Would that be the biggest risk?
Look, fortunately, particularly in United States market, they look far ahead. So a lot of new orders which we are getting there for 2025, 2026. That's the one thing. The second thing, we have seen the change of the government when we have been in US market for 10 years. None of the government has gone against the solar. So that is very clear thing. If the regime change, solar is going to continue. The way the energy prices are going up across the globe, today the solar is the cheapest and nobody can afford to neglect the solar. So I personally don't see that there will be any change in the coming days.
Okay, so that was the word coming in from the CMD of Vari Energies in a conversation with Nikunj Dalmia. Let's slip into a short break, but before that, let's take a look at the power pack lineup we've got for you today. And at 9:20, you've got Venugopal Gare, who's the managing director of Bernstein. He's going to talk about market trends and where he sees growth and what sectors he could see emerging. Then following that at 9:40, we've got Sameer Shah, who is the CFO of Godrej Consumer Products, and he's going to talk about the company's Q4 numbers. Moving on, at 9:50, we've got Sandeep Tandon, who's the CIO at Quant Mutual Fund. He's going to talk about market trends as well. And following that, at 10 a.m., we've got you Atul Chaturvedi, who's the executive chairman of Sri Renuka Sugars, also talking about the company's Q4 numbers. And moving on, at 10:20 a.m., we've got Rajendra Gandhi, who's the managing director at Stuffcraft, who's going to talk about the demand trends in the kitchen segment. So with that, let's slip into a very short break. Don't go anywhere.
Welcome back. Here watching Market Cafe, and we'll move on to the news coming in on the domestic front. The one company that's been in news is ONDC. A day after ONDC's food delivery story created ripples in the stock of Zomato. Sources now tell ET Now that ONDC plans to cap incentives for sellers and buyers' side apps. Now, the move will likely reduce price differences between the established platforms Swiggy, Zomato, and ONDC.
Alright, let's shift focus and go on to some earnings. And L&T's margins dipped for Q4 to 11.7% compared to the same time last year. The company has also announced a dividend of 24 rupees per share for FY23. Ashesha is here with more details of the quarterly results and a quick roundup. Hi Ashesha.
Well, yes, L&T numbers this time around are a tad bit below what the street was working with. Revenues have come in at 58,335 crores, which is an uptick of about 10% on a year-on-year basis, but below what the street was working with. Margins, meanwhile, have contracted this time on a year-on-year basis. They've come in at 11.7% versus 12.3% that the company reported same time last year. As far as order inflow is concerned, that looks pretty strong. We were expecting order inflows to stand at about 70,000 crores, and it has come in at 76,100 crores, and international orders constitute about 47% of their total order inflows this time. As far as outlook is concerned, management says that they are cautiously optimistic on their large project wins and timely execution of their large order book. As far as, remember, there's a change in chairmanship as well that has come in for L&T this time. Mr. A.M. Naik has stepped down as the non-executive chairman of the company, and Mr. S.N. Subramaniam, who's currently the chief executive officer and managing director, has been re-designated as the chairman and managing director of the company with effect from the 1st of October 2023. Meanwhile, company has also given guidance for FY24, where they say that revenue growth could be anywhere between 12 to 15% for FY24 versus FY23. As far as margins are concerned, they say that margins could stand anywhere between 8.5 to 9% for FY24. They say order inflows could see an uptick of about 10 to 12% in FY24. All in all, for this quarter, numbers are weak. They were below what the street was working with, but for FY24, they've given strong commentary.
The company has closed FY23 with 3.99 trillion rupees worth of orders, which is 12% higher than the 3.57 trillion of the previous year. Nearly 28% of this 3.99 trillion rupees is from international orders. And Saudi Arabia, as I mentioned earlier, is the largest overseas contributor for our orders. In all, of the 3.99 trillion rupees of order book, 71% is from infrastructure sector and about 18% is from energy sector.
And moving on then, Dr. Reddy's Laboratories saw growth in its business on a year-on-year basis. But sequentially, the net income was down 23.1%. The same trend followed in its US and emerging markets businesses. My colleague Shrishti is here to break down all the numbers just for us. Over to you, Shrishti.
Well, this time around, a good set being reported by Dr. Reddy's, where the revenue and the profit was in line to the ET now estimates, while a slight outperformance was seen onto the EBITDA and the margin figure of the company. The revenue saw a jump of 16% on a YOY basis. 6,297 crores is the number. EBITDA was grown by 26% YOY at 1,631 crores, where we were expecting the margins at 25%. The company reported 25.9% on that front. And lastly, onto the profit figure, 959 crores is the number, in line to the ET now estimates. But let's talk about the geography performance. The North America and the India business were the drivers this time around, where the decline on a sequential basis was actually less than what we were expecting. Other than that, the US growth was led on the back of the new launches, favorable forex rate movement, but was partially offset by the price erosions. Coming to the India business, versus a decline sequentially, that was the expectation. The company has grown by 14% on a sequential basis for their India business, and they say that the price increases of their product is what led to the expansion of this one. Coming to the PSI business, that was a flattish growth sequentially, but the company says that they are seeing initial signs of recovery in this particular segment. So the commentary is also decent and a good set being reported by Dr. Reddy's.
Okay, Shrishti, thanks for that roundup on Dr. Reddy's. But what are brokerages making of these earnings of L&T as well as Dr. Reddy's? My colleague Vamakshi joins in with the exhaustive roundup. Vamakshi?
Well, good morning, Snehi. Absolutely. Let's first start off with L&T. We have a note that has come in from Kotak, and they've highlighted that the company has reported a weak print both on core E&C EBITDA, as well as the guidance was also weak on all three fronts. Now, vagaries of EPC business may limit the EBITDA growth below the sales growth is what they're highlighting, and on the back of that, they've actually lowered their core E&C estimates for FY25 by almost 12%, and that is mainly owing to slower execution as well as lower EBITDA margin. So given those factors, Kotak has actually downgraded its rating on L&T from add to reduce, and in fact also cut its target price from 2,260 per share to 2,190 per share. The next stock on our radar is Godrej Consumer, that is GCPL. We have a few brokerage notes that came in after the company declares its Q4 numbers. Morgan Stanley has maintained its overweight call with a target price of 1,129 per share, while JP Morgan has also maintained an overweight call with a target price of 990 per share. Largely, brokerages are saying that the Q4 was a margin-led earnings beat. The domestic business is on a good trend, while the Indonesia business is back on the growth path. The quality of the profit has also seen an improvement, and overall, we are seeing that brokerages are appearing to be quite positive on GCPL. And lastly, watch out for Dr. Reddy's. We have a note that came in from Jefferies. Revlimid sales have dropped, leading to a miss. The US sales could remain volatile. New product launch momentum is expected to remain strong across geographies, and in fact, they've lowered their FY24 EPS estimates by 5% on the back of lower margins. So given all these factors, Jefferies has actually maintained its buy rating on Dr. Reddy's, and in fact also hiked its target price from 5,535 to 5,650 per share.
All right, thank you for that roundup, Makshi. And another stock that is in focus is Gujarat Gas. The gas major reported a beat in the quarter four earnings, largely aided by volume growth and higher margins. Somit is here with all the number crunching. Take it away, Somit.
Well, Gujarat Gas reported a strong set of numbers in the fourth quarter of FY23. If you see the company's EBITDA and net profit, they have beaten the street estimates by around 5 to 10 odd percent. However, do remember the beat is lower than what MGL had done of around 10 to 20%. However, the volume growth is the key number for Gujarat Gas, and that has come in ahead of the street estimates. The volume have grown nearly 22% on a sequential basis, and this is because the company had lowered the gas prices for industries, and that's how they gathered most of these volumes in the fourth quarter of FY23. Now, our beat on EBITDA and net profit was largely on account of lower gas costs, which declined nearly 8% on a sequential basis because the procurement cost of long-term LNG and spot LNG declined significantly for the company in the fourth quarter of FY23. And the bigger announcement that has come in from the company is the fact that the company has announced its highest ever dividend since listing of around 6.65 rupees, which translates into a dividend yield of around 1.4% as against its 5-year average of just 0.3%. Now, in its analyst meet, the company also said that the total volumes have currently improved to around 9.5 MMSCMD as compared to 8.9 that we had seen in the fourth quarter, and the management is targeting that the FY24 exit rate of volume would further increase to around 11 MMSCMD, which is a strong commentary coming in from the management. And the management also said that the industrial PNG volumes are currently stable and the prices are lower than what the propane or the LPG prices are, which is the competition for Gujarat Gas. And they have refrained from giving any margin guidance as they're saying that the focus for FY24 would remain on volumes. And they also said that going ahead, the dividend payout policy would be nearly 30% of the profits going forward, which is also a positive commentary coming in from Gujarat Gas management.
All right, Somi, thanks for that. So that was a number crunching on Gujarat Gas. But stay with us, because after the recent MSCI changes, 4 more names could be included in the index according to Morgan Stanley, besides a revision in the weightage across stocks. So Somi, tell us how this will affect flows in the respective stocks.
Well, the MSCI changes will be announced today post-market, but for India, the numbers or the names of the stocks would come out tomorrow early morning. So the adjustments for the inclusion, exclusion, or the changes in the weightage would happen on May 31st. Now, what brokerages are expecting is an inflow of close to $1.3 billion US, of which most of this amount would be going towards increase in weightage of Kotak Mahindra Bank. However, let's first start off with the potential additions or exclusions from the index. Hindustan Aeronautics and Max Healthcare have a high chances of getting included in the index, and the potential inflows could be in the range of around 180 to 256 million US. Now, Power Finance Corp of Power Finance, Cummins India, and Ashok Leyland have a medium to high chance of getting included in the MSCI index, and the inflows could be in the range of around 140 to 154 million US. And on the exclusion side, there's only Industars, which has a high chances of getting excluded from the index, and the potential outflow could be close to 83 million US. Now, when it comes to weightage increases, it's Kotak Mahindra Bank which will see an increase in the weightage, which could lead to an inflow of close to 730 million US dollars or 740 million US dollars, which is nearly 9 times its 20-day average volume. And also Indigo, Samvardhana Motherson, and Zomato could see an increase in their weightage, and inflows could be in the range of around 19 to 28 million US dollars. And lastly, on the weightage a reduction, there is only Adani Transmission and Adani Total Gas which could see a reduction in their weightages, and the outflows could be in the range of around 80 to 120 million US dollars. So keep an eye out for these stocks.
All right, thank you so much for the MSCI reject details, Somit. And with that, it's time for us to slip into a short break. After the break, we get you all the stock specific action.
Welcome back, and thanks for staying tuned to Market Cafe. This is ET Now. Now, while the SGX Nifty is indicating a rather muted start, what are some stocks that could be abuzz in trade today and the ones that you should be keeping an eye out for? My colleague Vamakshi joins in with a list.
Well, absolutely. A whole host of counters will be in focus on the back of their numbers. Let's first look at some of the good numbers that came in. Ratnamani Metals and Tubes, well, a strong set coming in as far as the revenue as well as net profit as well as an improvement improvement in margins is what we're seeing. Revenue saw an uptick of almost 54%, while net profit went up strongly by almost 73%. Margins have improved from 17.3% to 20%, an improvement of almost 300 basis points. P&G Hygiene is posting a weak set of numbers. Rather, revenue from operations did decline by almost 10% on a year-on-year basis, while the margins have remained flat. EBITDA has seen a downtick of almost 10%. HG Infra Limited, well, an inline set of numbers that came in from this counter. Revenue saw an uptick of almost 44% on a year-on-year basis. The margins, however, are up on around 120 basis points on a year-on-year basis to 19.3%, while the net profit is up strongly by 64.5% on a year-on-year basis. Apart from that, we also have Zomato on our radar. Well, the stock has been in the news flow on the back of news surrounding ONDC, and ONDC has actually capped incentives for sellers as well as buyer side apps, and as a result, we're expecting that the price difference between Zomato, Swiggy and ONDC platform may reduce further after a cap. Apart from that, we also have Escorts on our radar. There was an earning calls yesterday, and in the earning call, they highlighted that in the first quarter, tractor volumes are expected to remain flat, while the rest of FY24 volumes can grow in mid-single digits. The construction equipment's current growth momentum is also expected to continue. Apart from that, HCL, Max Healthcare, watch out for these counters as well. There are high chances of exclusion in the MSCI indexes. MXCI announcements are expected today post-market hours, so watch out for these counters as well. RVNL is also on our radar on the back of another order win. No surprise there, receives 300 crores order from Metro project from MMRDA. Apart from that, Adani Enterprises, Adani Green Energy as well as Adani Transmission, all these counters are in focus as a board meeting is scheduled to happen in order to consider fundraising via equity on May 13th. And lastly, as far as the IPO market is concerned, watch out for Nexus Select Trust REIT IPO. It has been subscribed by 57%, and today happens to be the last day in order to subscribe for this IPO.
All right, then thank you so much for that, Vamakshi, and the last day to subscribe for the Nexus IPO. Moving on, Hindalco's wholly owned subsidiary Novelis came out with its Q4 numbers, which were largely in line with the analyst expectations. Now, the company saw a sequential improvement in the numbers on the back of the price hikes taken. My colleague Ashisha is here with all the details and the key takeaways from the management con call. Over to you, Ashisha.
Well, yes, Novelis, which is Hindalco's wholly owned subsidiary, has reported largely in-line set of numbers. On a sequential basis, we have seen growth because of price hikes that the company had undertaken in the quarter gone by. As far as numbers are concerned, net sales has seen an uptick of about 5% on a sequential basis. Shipments, meanwhile, has seen an uptick of about 3% QOQ, and this is lower than what the street was working with. And this is because beverage can shipments were impacted due to inventory reduction that was done by customers. In fact, as far as inventory destocking is concerned, management has given some guidance where they say that they expect peak can restocking by the first quarter of FY24. They also say that second quarter may be impacted due to lower demand from building and construction segment. Third quarter is in any case a weak quarter, and hence management expects full recovery only by fourth quarter of FY24. As far as other internals are concerned, adjusted EBITDA per ton for the quarter gone by saw an uptick of about 18% on a quarter-on-quarter basis, and management says that in the first half of FY24, EBITDA per ton could stand anywhere between $400 to $450 per ton. And in the fourth quarter of FY24, EBITDA per ton could finally stand at $500 per ton. This is the guidance that the management had given earlier. As far as debt position is concerned, debt has come down drastically in the quarter gone by, but given the aggressive capex plans that the company has, management has said that debt position of the company could increase by the end of FY24. All in all, for this quarter, numbers were in line with what the street was working with, but FY24 guidance is a little muted, and they say that they expect full recovery only by the fourth quarter of FY24.
Okay, thanks Ashesha for all of that. But let's keep with earnings, and Eicher Motors will come out with its Q4 earnings today, where both revenue and net profit are expected to inch up on a year-on-year basis. New launch plans will be a key factor to watch out for. So let's go across to Shrishti to understand what is expected from this and what the street is penciling in for Eicher Motors.
Well, yes, absolutely. And talking about the volume growth this time around, yes, there has been a jump on a YY basis, but sequentially the volumes were almost flat with 2.5% of the jump, and that's what we are expecting. A similar kind of a performance onto the top line of the company. Not much expectation. A muted growth is expected this time around. A number of 3,718 crores is what we are expecting, and that will be on the back of the lower average selling price of the vehicles. The product mix wasn't that strong this time around, and the price protection was also given to the consumers. So on the back of the products that were not much higher or not that expensive, the case in point being Hunter 350, because of that mix, the revenue is expected to show a muted growth. But coming to the margins of the company, that is expected to actually move up from 23% in the last quarter to 24.2% this time around, and the jump will be led by the operating leverage, better realizations, as well as the rebound in the export markets is what we are seeing, as well as their spare business. That is a very high margin segment that is also expected to support the numbers of the company. On to the profit figure, a jump of 9.5% is what we are expecting. 810 crores is the expectation on that front. But other than that, talking about the VECV EBITDA margins is also expected to improve on the back of improved volumes that we have seen. So all in all, a decent set expected from Eicher Motors, but nevertheless the stock has corrected significantly from its 52-week high levels. So any surprise on the margins or the profit figure of the company will be will be considered good for Eicher Motors, but definitely we'll be watching out for the new launch plans and the outlook of their exports business, because on the year-on-year basis we have seen just a growth of 4%.
All right, thank you so much for that, Shrishti. Besides Eicher Motors, Asian Paints is also in focus as it is set to declare its Q4 earnings, and the street is penciling in an uptick in the top line as well as the net profit. Now, what are the factors that you must keep an eye out for? My colleague Ashesha is here with all those details and what you can expect from Asian Paints Q4 results.
After a dismal third quarter, we are expecting good set of numbers from Asian Paints this time. Volumes are expected to recover this time around owing to gradual recovery that we saw in demand in fourth quarter. As far as numbers are concerned, consolidated revenues are expected to come in at about 8,850 crores, which will be an uptick of about 2.5% on a year-on-year basis. Meanwhile, margins are also expected to recover this quarter owing to lower raw material prices that we saw in the quarter gone by. Both crude oil as well as other raw material prices have declined anywhere between 12 to 15% on a year-on-year basis, as a result of which margins are expected to expand by about 140 basis points on a year-on-year basis. Remember, company had also undertaken a lot of price hikes in the quarter gone by, which will also aid margins this quarter. As far as key monitorables are concerned, management commentary on price hikes, intensifying competition in the paint industry, as well as management guidance on FY24 guidance will be crucial. All in all, strong set of numbers are expected. Higher volumes, strong demand, and the price hikes that the company had undertaken in the quarter gone by, coupled with lower raw material prices, are expected to aid numbers this time.
All right, thanks Ashesha for that number crunching on Asian Paints and what the street can expect. Now shifting focus to India's largest cab aggregator, one of India's largest cab aggregators, Ola, US investment firm Vanguard has gone ahead and slashed Ola's valuations by 35% to $4.8 billion from an earlier $7.4 billion. Remember, this comes in amid a series of valuation markdowns gripping the startup ecosystem of the country. This is the third valuation markdown of Ola by the same investor, and the same group had cut the value of its investment in the ride-hailing firm by 45% in the first half of 2020 and another 9.5% in 2021.
All right, then we're completely out of time on this show. It's Snehi and me taking your leave, but stay tuned for the markets. Thank you so much for tuning in.